Hi, good morning, everybody, and welcome to Nedgroup Investments Multi-Managers' second webinar of the year. And I welcome you from a nice, cool and cold Cape Town. We have a number of dialers and webinar attendees from all over the country, and welcome to everybody. And I hope you're keeping warm and safe and healthy. We've really got a great lineup of speakers today for the next hour and a half or so. And so I will straight away go into a few of my slides. I'm going to really try and just set the scene for our speakers of the day. So I'm just going to open up the presentation and we will get going. So just in terms of the speakers for today in the lineup, we're going to start off with Nikki Weimar from Nedbank's chief economist. She will be setting the scene in terms of 5 actions that government needs to make in terms of getting the economy going. We're then going to hand over to Sunaid de Villiers, a member of the multi-manager team, who's going to talk a little bit about behavioral finance and do clients have enough risk within their portfolios. We then hand over to Ian Power, fund manager of the Nedgroup Balanced and Managed Fund. He will be looking more at the domestic investment markets, specifically focusing on South African retailers and some banking stocks. And we then hand over to Professor Piet Nordier. He has spoken before at some of our Nedgroup presentations, and he will be looking really at the impact of COVID on the South African schooling system and the opening up of schools in terms of the current environment, and I guess the ethics and morals behind opening schools up versus managing the health benefits and risks on the other hand. And finally, we have Terry Smith, who will be dialing into us actually from Mauritius, and he is the fund manager and founder of Fundsmith, and he will be really focusing on the FANGs stocks. Is that a bubble waiting to burst? And we know that the FANGs have really been skyrocketing over the last 12 months or so. Just to set the scene, I think a little bit, what has happened over the last quarter in terms of actual markets. And if we take a look at this slide and really look at the square that I've highlighted in red, if we take the South African equity market, it's up 11.5% over the last quarter. South African property is up 4% and bonds and cash roughly flat, up about 1% or so. If we look at the bottom part in gray, that is the global markets measured in US dollars. And we'll see there the MSCI All Country World Index is up around about 16% in dollars, listed property up 9%, and global bonds up 3.7%. So really across all asset classes and both South African and global markets, it's been a very strong quarter and past 3 months. If we look now actually at the middle section, I'm sure some people won't actually be aware the South African rand has actually strengthened by 7% or so over the last 3 months or so. So that is the South African, the returns of global markets, but measured in rands. And you'll see there equities up 9%, property up 2% in rand terms, with bonds and cash actually giving you negative rand returns. This is the currency. South African currency over the last 5 years or so. We see as of this morning, I went and checked, we're currently trading at around about 1660, 1658 to the dollar, which is certainly an improvement of around 1950 or so that we were in the peak of the crisis in March or so. So you'll see there on the right-hand side, the graph, how the rand has come back in the last couple of months. And it's certainly one of the most liquid emerging market currencies that we have, and you can see that the rand is certainly pretty volatile currency relative to the dollar over time. This, I think, is quite an important slide, and this one really looks at the real returns across asset classes. So what we have done here is we take the actual return that the various asset classes have given us, and we strip inflation out of the return to give us the real return. And this is really the return that, as an investor, we need to achieve to grow our wealth, because we need to grow our wealth over and above whatever the inflation rate is. And if we look really, I guess, at the navy blue block, which is the 10-year real returns, we do also have the 3- and 5-year real returns in this graph, but let's focus on the longer term of 10 years. Starting on the left-hand side, we'll see there that South African equities over the last 10 years has given you about 5.5% real return, which is below the long-term average of about 6.5% to 7%. So it's not bad, but not fantastic. South African listed property the last decade has been absolutely terrible. It's given you a negative 2% real return per year for the last 10 years. Having said that, the previous decade was actually an extremely strong decade. South African bonds and cash has given you 3% and 1% real, which is roughly in line with their long-term averages. And then towards the right-hand side of the graph, which is the global returns measured in rands, they've given us pretty strong and decent real returns, with a lot of that returns, virtually half of those returns, coming actually from rand weakness. Looking at the South African stock market, this really plots year to date. So for the first 8 months or so of the year, the returns of some of the top 10 best performing and the worst 10 performing shares on the stock market. So if we really start off perhaps on the right-hand side on the best performing stocks, these are the 10 best shares year to date, and they've really dominated by the gold mining and platinum shares. So we see here Goldfields, Anglo American, Anglo Gold, Northern Platinum, Ronet, etc., all up. Goldfields up 131%, being the best performing share, and otherwise up around about between 50 to 100%. The other standout shares, I guess, is Naspers and Prosus, which are one of the same business. One listed locally, one listed in offshore, and that has been a strong performer. It dominates the index in terms of the South African stock market, and along with other technology shares has performed really well. On the left-hand side, which is our top or our worst 10 performing shares, again dominated by the financial institutions. We see all the banks there: RMB, Nedbank, Absa, Capitec, Old Mutual, First Rand, down between 40 to 50% year to date. And just in the last couple of weeks, the banking companies have come out with their results, and we see headline earnings per share are down between 50 and 70% across all of the banking stocks. On the bottom, we see Mr. Price, one of the big retailers in South Africa, down close to 40%. So retailers, banking stocks have really taken a knock year to date. In terms of the South African economy, hasn't been a great quarter. The results just came out this week. South African economy contracted by 40% for Q2 of this year, which is the worst quarterly contraction in over 30 years. We're expecting the South African economy to contract by between 8 to 10% for the year of 2020, which would be the largest calendar year contraction in over 100 years or so. Interest rates in South Africa remain positive, at least, as opposed to the rest of the world, where many countries are in 0 to negative interest rates. South Africa, you're getting around about 4.5–5% on your money market. Inflation's about 2.5 to 3%. So you're having a real return of around 2% on your cash, which is certainly better than in many other countries. Inflation figures for July just came out this week. It was at 3.2%, which is right on the bottom end of the government's target of 3 to 6. And ironically, though, was a 45% month-on-month increase from June, where the figure was measured at 2.2%, and it's the biggest one-month rise in inflation since February 2016. And we've spoken of the Rand. Interestingly enough, the Rand on Friday actually strengthened 2.8% against the dollar to 16.56, which was one of its strongest one-day moves in many years. Looking a bit more offshore now, I thought this was quite an interesting fact and slide. So this shows us Apple, unbelievable business. And on the left-hand side, you will see there the Apple share price. The company went public in 1980. It took 38 years to reach an unbelievable market cap of $1 trillion. And in less than 2 years, it's now doubled its market cap to $2 trillion. And in terms of its market cap of $2 trillion, it's now larger than the FTSE 100 companies in the UK, so your 100 biggest listed companies in the UK, as well as larger than the entire Russell 2000 index in America. So Apple has totally been flying. In terms of social media companies, and here I guess we're talking a little bit about the FANGs, we came across this interesting slide also that really just shows you in terms of the number of monthly active users that are using these social media businesses and platforms. So there's about 7 billion people in the world, and Facebook has 2.6 billion active users every single month. WhatsApp has 2 billion, YouTube 2 billion, Messenger 1.3 billion. So virtually every 1 in 3 to every 1 in 2 people are on Facebook or WhatsApp every single month out of people in the entire world. And I guess this is why we've seen, and Terry Smith will talk to it in his presentation, why these FANGs or tech companies have been absolutely flying over the course of the last couple of years. And last slide from my side, which we also thought was quite interesting, is just looking into the future of which countries are really going to be dominating the world and economies. So if we look at 2030, so 10 years from now, really China currently ranked #1 in the world as at 2017, holding on to that #1 ranking, but its GDP growing from $23 trillion to $64 trillion. So basically tripling its economic size over that 13-year period. India will be #2, the USA #3, those two countries swapping places over the next decade, and then the rest of the countries. I think it's quite interesting to just see that countries like Japan, Germany, which are, let's call it the more first world developed economies, actually falling down the rankings from 4 and 5 to 9 and 10, and more your emerging type economies, Russia, Egypt, Brazil, Turkey, really growing in terms of their demographics, their economic output over the next decade or so. So hopefully that just sets the scene, I guess, for the speakers coming up in terms of South African stock market, banking stocks, retailers, as well as in terms of the global economy.